Hi there guys, I hope you are well. This is part 3 of how to trade smart money concept. So in part 3 guys, we're gonna be focusing on trade. We're gonna be focusing on top-down analysis and also entry types and also risk management. So what will happen is here guys, as you can see here on my charts, I have drawn what I have spoke about in the previous video, whereby the high that caused the break of structure becomes our supply, and a high that causes a break of structure becomes our supply. And also same thing applies on the low that caused the break of structure becomes our demand, especially in a downtrend, which I would love you to focus here, is that on the blue box that I've drawn here, is that we are in a downtrend here guys, as you can see. Fine. So one thing that I need you to understand is that looking at this arrow that is showing down, it's indicating a downtrend, right? So as you can see, the points that I have highlighted with a red dot, it shows that these are our swing points, our higher highs and our higher lows. Understand guys, our lower lows and our lower highs. So what happens is that guys, previously on the previous video I explained that the high that causes the break of structure becomes what? A supply. Same thing here. We had a high here that caused the break of structure, then it becomes what? The high that caused the break of structure becomes our supply. Same thing over and over guys. I won't repeat what I've been teaching you on the previous video, but I'm just gonna show you with these drawings that I have drawn here for you so that you can get to understand. So what happens is that on a downtrend, as you can see here with this arrow indicating a downtrend, on a downtrend, when we're having our break of structures, after identifying a break of structure, you need to ask yourself, what caused the break of structure? What caused the break of structure? And then what caused the break of structure? It's what becomes your supply. Same thing here. These zones here is our supplies, right? So these zones here are the zones that when we draw, or maybe when we do our top-down analysis, those are the zones that we're gonna be interested in taking trades once price comes to those zones. For example, looking at this one here, this high here that caused the break of structure here, which now becomes what? Our supply. And what happened is that later on price will come to this supply here, and once it comes to that supply, that's when we look for trades. You understand? That's when we look to short the market. You understand? Same thing here. This supply that we have marked, price will eventually come and respect it. And once price come respect our supply or our demand level, that's when we look for trades. But in this case, there are two types of entries. We cannot end. It will depend on you. Understand that? Are you comfortable taking what? A risk entry, which you will enter once the price reaches that supply, or you will wait for a confirmation? You understand guys? So I just want you to screenshot this structure that I've drawn so that you can later come and refer to it. Understand guys? So now guys, I will move to the live charts, because what I'm trying to explain here is something that I've been explaining on the previous video, and I hope now you know how to draw your supply and demands level. So we're gonna do multi time frame analysis, a top-down analysis starting from a daily time frame. So what happens is that once we start from our daily time frame, we will understand the overall movement. You understand? Once we understand the overall movement, we'll then understand that are we in an uptrend or are we in a downtrend. And by understanding so, that's when we can get to take advantage of the market, buying or selling. Hope you understand that, guys. So let's do our top-down analysis. So we're gonna be looking at USD JPY. So what will happen is that on our USD JPY, excuse my network, guys, it's a bit slow. We're gonna look at USD JPY. So let's start from a daily time frame. Now we are on a daily time frame, right, guys? So one thing I need you to understand is that why do we start on a daily time frame? A daily time frame, it's giving us an overall direction. Once we understand that price, it's on a demand, it's respecting demand on a daily time frame, that's when we understand that we can be buying for the whole week, we can be buying for the whole day, which that's the power of top-down analysis. So first thing first, that's the thing. One thing that you need to do, identify your highs and lows, identify your swing points. So here I'm going to identify my swing points quick, guys, for you. So my swing points is going to be this lower low, lower high, lower low, lower high, and lower low here, and our lower high, lower low here, and our lower high, and then lower low here, and our lower high, and the lower low, and our lower high, and our lower low. So now I have identified my swing points. Let me erase my swing points and use something that it's gonna be dark, so we can both get to see without being irritated. So here we have our lower low, our lower high, 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 and our lower low. Fine, now we are done. We are just gonna zoom so that we can get to see clear. So remember, once we get to identify our lower lows and our lower highs, what we're gonna be doing is drawing our break of structure. So here what happened is that we had our down break of structure, we had our down break of structure. My network is a bit slow. I want it to write a test here so that you can see that it's our break of structure. Yeah, so let me make it. So there we had our break of structure. As you can see, our BOS stands for break of structure, and also here we have our BOS, and then here we also had our break of structure, and also here we had our break of structure, and also here we had our break of structure. So remember, what caused a break of structure becomes what? Our supply. Here is this one becomes our supply, and we also had supply that caused the break of structure here, and then again we had our supply that caused the break of structure here, and then also here we had our supply that caused the break of structure here. I don't know what's happening about my network, guys, it's a bit slow. These zones that I'm drawing supposed to be red, so that it can indicate that we are expecting to sell once the price taps into those zones. And this is our supply also. So one thing you can see, guys, is that once you get to identify your supply zones and your demand, first and first you need to identify your swing points. After identifying your swing points, draw your break of structures, identifying that this is a break of structure. And once you are done, you just wait patiently for the price to come and mitigate that level, right? As you can see, guys, price keeps on returning back to those zones. Price keeps on returning back to those zones. Remember, we are on a what? Our daily time frame. So now I want us to focus here. I want us to focus here. What we can see is that since it's the recent price, right, you can keep your zones short, not to keep them long like this. You can keep them short. Once price comes there, or once price is close to that level, that's when you can ray in or extend your zone. You understand, guys? So here what happened is that price, it has respected what? Our daily supply, right? That was caused by what? That caused the break of structure here. That caused the break of structure here. Price came and respected here. Since it's on a daily time frame, we cannot enter directly from a daily time frame. What we need to do is we need to go to lower time frames, and then that's when I'm gonna use my vertical line to highlight where price, when price was respecting or respected that level. So by this ray line, let me make it red. So do you see this red line? This red line indicates when the price, on the day that the price came and respected our supply, right? Fine. Then we're gonna go back to 4 hour. Remember, our main focus is here. It's on this zone here. It's on this zone that price came and respected. And then since price came and respected that zone, as you can see, it respected that zone here. Remember what I was teaching you guys is that those zones that causes the break of structure, price will eventually, after some time, go and respect those zones. What we do is that once price gets to respect that zones, that's when we look for sales in a downtrend, especially once price is respecting supply. So as you can see here, what happens is that price respected that supply, and then because of it's on a 4 hour, we cannot just trade directly from the 4 hour, but what we need to wait for is to wait for market shift, for market to change direction. Remember that if you can see here, price has been moving in an uptrend, right? Price has been creating higher highs, higher lows, higher highs, higher high lows, highest lows. So we cannot just trade directly, take a sell here. We need to wait for a change of character, which I spoke about in part 1. So a change of character, it's something, it's in a simple term, it's when price is changing its character. Let's say price was moving in an uptrend, so now it's changing into a downtrend. So in that way, it's our change of character. That's the first confirmation to indicate that the price, it is likely to change the direction. So on the 4 hour, normally what we need to do is that since we went on a daily time frame, we spotted our supply zone which is this zone that was caused by a break of structure. So what happens is that on a 4-hour, what we wait for is to wait for a change of character, right? Sometimes it might not be clear on a 4-hour, hence that's when we we go to the 1 hour, because of sometimes you cannot see what the lower time frame is showing us on a higher time frame. So in this case, now we are on a what? On our 1 hour time frame. Remember, our main focus is here when price came and respected our supply, right? Fine. So once the price, let me now move here for 2 minutes. Let's say this is our daily supply. Price comes and respect our daily supply, right? What we do, once price taps our daily supply here, we go to smaller time frames. In this case, not smaller time frames, but medium time frames, which is our 4-hour and 1 hour, right? Then once we get to our medium time frame, let's say price has tapped here on a 4-hour, and then what happens is that on a 1 hour, what we're gonna be waiting for, we're gonna be waiting for a change of character. We're gonna be waiting for something like this to happen. We're gonna be waiting for something like this to happen. In this case, it's our down change of character. Gonna be waiting for something like this. After a change of character, what follows is a down, it's a break of structure. So guys, my network is very slow guys, but try and bear with me. So guys, I paused this video because the network was bad, but now I guess it's okay. So here, remember, we were at what? Once the price gets to the daily time frame, that's when price respect the daily supply here, we go to the smaller time frame, which in this case it's our medium time frames. So here it's gonna be our medium time frame. So in our medium time frame, that's the pattern that we wait for. What do we wait for? It's a change of character, as you can see here. Remember, here is one price respect our daily supply. Once the price on a daily time frame, we see that it has respected our daily supply, then we go to our 4-hour and 1 hour to look for a pattern, which in this case, this is the type of a pattern that we're gonna be looking for. We're gonna be looking for a change of character, as you can see. After a change of character, what caused the change of character? Same thing, right? Same theory as what caused the break of structure, things like that. What caused the change of character? That's when we enter our trade. Gonna enter our trade here, put our stop loss here, and then target 5R like this, and then that's gonna be your trade. So this is an entry type number 1, which is confirmation entry, which is a reduced risk entry. So if you don't want to take a reduced risk entry, which this one it's a confirmation entry, you know that price has respected the daily supply, but before you just enter, you just wait for a confirmation, which a confirmation will come from a lower time frame and will come from this type of a pattern, whereby after a change of character, you mark the zone that caused the change of character, then you enter there. That's your reduced risk entry. Or let's say you want to take what? A risk entry. You will then say, once price mitigates what? That supply level, or zone, you won't wait for confirmation, you will enter directly. But guys, there are possibilities and there are disadvantages, and there are also advantages of either using a risk entry or either using a reduced risk entry. But I don't want to dive that. I don't want to explain that now, since I don't want to keep this video long. So hence you understand here from my drawings that I've been showing you on how to trade smart money concept. What I want us to do is to go back to our charts. Now let's go back to our charts. Right there, this is where we were. Right, if you can see, here was when the price mitigated or respected or reacted on our daily zone, which our daily zone was this zone here. And then once the price react on our daily zone, what we're looking for is we're looking for this pattern, which this pattern, this is gonna be our change of character. This is gonna be our change of character, and after our change of character, we're gonna mark what caused the change of character, and we're gonna enter right here. So this is our pattern for entering, right? So now, as you can see here, where do we see this pattern is right here. Here we had our change of character, down change of character. We had our down change of character. We had our change of character. As you can see here, we had our chalk change of character, and what caused the change of character was this level here, and then that's when we put our entry here, and then price comes and respect that level, and then we target 5R. In that case, this could have been a win trade. Simple as that, guys. I don't want to dive into 15 minutes, 1 minute, because of that one. It's when now you have known how to identify your zones and the right areas to trade from, and that's when you now used to trading the strategy, and you are now getting good at trading it using higher time frames for entry. So guys, that's it from part 3 of our entry type pattern. So going back to what I was teaching you guys is that there's something that I'm looking for. I don't know where it is. I don't know where it is. Okay, but it's okay guys. Now, so I'm gonna end this video here. So in highlight, in closing, remember, once we had our lower low, lower high, lower low, lower high, lower low, lower high, lower low, and once we have our higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, remember, here we're gonna have our break of structure, break of structure, break of structure, break of structure, and here we're gonna have our break of structure, break of structure, break of structure, break of structure. What caused our break of structure becomes what? Our zones. So this one is gonna be your zones, 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 this one is gonna be your zones. These zones are the zones that you wait for them, you wait for the price to come to that zones, and that's when you apply the pattern that I have shown you on how to enter. Wait for a change of character and then you enter. Hope you found value from this video guys.